Now, the rout in the gold and silver markets has shown some signs of easing on Wednesday, and that has come after the Asian stocks have slid on President Trump's back-and-forth rhetoric. While Trump was optimistic of a fair trade deal with China, he also suggested that the planned one-to-one meeting with the Chinese Premier Xi Jinping next week may not happen. And amongst the factors that have dragged the precious metal down on Monday are the prospect of a trade deal between China and the United States, following weeks of threats and sniping after Trump's optimism of a fair trade deal. However, on again, off again, uncertainty due to Trump changing his mind on Xi meeting has hit the stocks. The gold showed only about 0.3% fall on Tuesday after losing as much as about 2.9% in early Asian trade on Tuesday. Gold and silver have witnessed their steepest sell-off in years as the investors bet that the recent record-breaking rally has left them overvalued. In the previous session, gold prices had slumped by about 6.3%, the biggest decline in more than 12 years. Now, shares of gold miners have plummeted as well, with the top producers, Barrick Mining, Newmount and Agnico Eagle Mines, falling by more than 8% on Tuesday. However, easing in the precious metals rout was reflected in silver edging higher on Wednesday after its 8.7% crash in the prior session. A gauge of Asian stocks has shed about 0.5%. The weakness across Asian stock markets partially stemmed from selling in the precious metal shares from Australia to Indonesia and China. The declines have also come after the Standard & Poor's 500 closed a little changed on Tuesday, even as the Dow hit a new record high. The traders remain on guard for signs of systematic selling across the assets. While the US government shutdown has caused an economic data vacuum, the declines in the stocks have been short-lived as the investors see them as opportunities to buy. And still, analysts say that the latest drawdown in precious metals could be a bit of a blip to long-term bets for higher prices.